Good morning, everybody. Welcome back to cilinixfxcapital. Hope you're all doing great this red morning, this bearish morning, and I hope you had a good weekend. In this video, we're going to do a full update about what's going on in the markets right now. Which I've heard quite a lot of different stories regarding the market open today, and what people saw and what they felt about it. So I will tell you what I personally see in the markets and what's going on right now. Now, ultimately. Let's start off with yesterday. Yesterday, this was this low perhaps was not a possibility, but a pullback was expected. Okay, I've told you the entire time last week after that move up that we had on Wednesday and Thursday, I said I think we're going to pull back first before we can rally into the next price target right here at 95 and 96,000. Right, so a pullback was always to be expected with the imbalances we had to the downside and the possibility even. To spike down into the point of control of that balance we had right here between the 23rd and the 26th of November. It was always a possibility, and you knew that, okay? You were prepared for that. The one thing that changed, however, is the fundamental circumstances, right? And some people this morning, they were talking, I think about, okay, well, what's going on? Why do we actually see this bearish pressure? Well, I'll tell you, first of all, you can see the volatility index is a little bit higher. It's not significantly higher if you compare it to Wednesday, right? So Wednesday we had the last real day of trading. Thursday was Thanksgiving. Friday we had half a day, and Friday was also very strange. Friday usually is very strange when it comes to the volatility index in general. But so we're trading a little bit higher. The key reason for that is statements made by the governor of the Bank of Japan, right? So this morning we got a little bit more fear because the probability that we are going to get another rate hike, yes, but with the Bank of Japan, we're talking about rate hikes and not about rate cuts. It's on the table, right? And at this point of time, there's actually a 60% chance that we are going to get a rate hike, whereas initially it was actually more likely that we were not going to get a change. And that's bearish, right? Because if the Bank of Japan increases their interest rates, first of all, bond yields in Japan are already going up for a few years, but those have rallied to levels we haven't seen there since 2008. That is relevant. That is not bullish for Japan. But outside of that, it also influences something called the carry trade. And I'm not going to go in depth about what that means. Maybe I'll make a video about that later today. But that is bearish for equities. Including also crypto, which is not really an equity, but it does move very similar to equities. So that has caused bearish pressure in the markets, or at least some sort of repricing, because right now the possibility of getting a 25 base points hike has to be calculated in. So that's why unrest is up, that's why equities are down, and that's why crypto fell down a little bit more than expected. But crypto pulling back was already to be expected. So now, and I'm going to be completely honest about this, what to expect today depends a lot for me about how the volatility index and equities, but those go hand in hand, of course, how those develop throughout the rest of the EU session into the NYO, into the US session. I think then we will have a better understanding of what the market actually thinks of what happened with the Bank of Japan overnight, and ultimately that is what matters most, right? There have been times such as in January 2025, when it didn't really matter that the Bank of Japan actually hiked their interest rates. And there have been times, if you go back to July 2024, when it actually did matter a lot, right? So we will just have to wait and see today which one of the two is more likely right now. Based on what we're seeing right now, from both the technical perspective on Bitcoin, I mean, we found a strong support level right here at 86,000, also the previous trend line right here, and we created a massive imbalance to the downside or to the upside, which is nice that we can move into that, with the key resistance level being right now between 88 and 89,000, by the way. So that's kind of the, if we really want a bullish Bitcoin, we would need to reclaim above that. I think for now that's going to cap the upside. But so technically we actually do have a chance to recover a little bit here. We've also seen some bullish divergences here on the lower time frames. But ultimately, whether Bitcoin is going to remain relatively or no, so it depends on the development. But under the current circumstances, with a volatility index that is higher but not incredibly high, and equities that have dropped down but have also found support, I would argue it's most likely for Bitcoin, if you look at the 4-hour time frame right here, that we are going to continue to find some stability. Most of the indicators that we also spoke about on Saturday, for example, are still pointing towards a local bottom being formed. although it's going to be interesting to see how the Coinbase Bitcoin premium develops. And we've also seen order book progress, which is not amazing. But like I said, I'll keep you updated on that. For now, I think that is what you need to know. So thank you for watching, everybody. Take care and bye.